China, the world's largest importer of energy resources, has virtually shut the door to American oil and liquefied natural gas, LNG, turning instead to Canada and Russia. This is not merely an economic move. It is a political statement. It is a slap in the face disguised as a contract. The reason? The trade war, launched by the administration of Donald Trump back in 2022, has now reached its peak. China has appointed a new international trade negotiator, Changan, which is seen as preparation for a prolonged and intense standoff with the United States. The appointment of a negotiator is not an attempt to resolve the conflict. It is a demonstration of resolve. Against this backdrop, Trump, despite his own confidence in victory, is facing reality. Washington hopes to pressure Beijing through tariffs, but instead of concessions, it is receiving a counterstrike aimed at the most vulnerable area, energy. So what exactly happened? In recent months, the United States has imposed staggering tariffs, up to 245% on Chinese goods. In response, Beijing has started to retaliate. One of these retaliatory steps has been a near-total refusal to purchase oil and LNG from the United States. According to Bloomberg, imports of American oil into China have dropped by 90%. This is a disaster for exporters in Texas and Louisiana. Now, Chinese refineries and state-owned corporations are turning to heavy oil from the Canadian basin. Why? It's simple. Canada offers stable supplies, steady supplies, competitive prices, and, importantly, a predictable political environment. In an era of sanctions, geopolitical games, and America First rhetoric, Beijing is choosing rationality. Paradoxically, Trump's actions, and aimed at strengthening U.S. energy independence, have produced the opposite effect. American producers are losing a key market. However, oil is only part of the picture. The LNG situation is even worse. According to the New York Times, liquefied gas shipments from the United States to China have dropped to nearly zero. Contracts are being canceled, tankers are being redirected to Europe, but Europe is not China. The volumes are different, the conditions are different, and prices, that's a whole different story. This raises an obvious question. Why is China doing this, fully aware that American oil and gas are among the most competitive on the market? The answer is clear. Beijing is pursuing a strategic objective, to minimize its dependence on the United States. Amid a tariff blockade, China is ramping up oil purchases from Russia at significantly discounted prices ranging from $10 to $15 per barrel. At the same time, it is drawing closer to Canada, despite past diplomatic tensions. China is building a new energy architecture in Asia, one in which the United States simply has no place. According to the latest data from China's Customs Administration, purchases of Canadian oil have nearly doubled over the past 3 months. This is not just a temporary solution, it is a long-term strategy. The Chinese are negotiating supply contracts with Canadian companies that span decades, including the development of terminals on the Pacific coast, the construction of oil storage facilities, and the expansion of pipeline infrastructure. This is no longer just economics. This is geopolitics. American producers are in despair. According to the U.S. Energy Information Administration, EIA, by the year 2022, the United States was exporting 3 million barrels of oil per day, a significant portion of which was going to China. Now, that market is gone, and there is no real replacement. European and Latin American markets are already saturated with players from the Middle East, Africa, and Canada itself. And here is the most interesting part. While Washington is cutting diplomatic ties with Beijing, Beijing is rebuilding bridges with Ottawa. Previously chilled relations over Huawei and other political conflicts are beginning to thaw. Pragmatism is prevailing over ideology. The question is simple. What matters more, political disagreements or strategic energy security? Against this backdrop, we are witnessing a clear shift of Canada toward Asia. For the first time in decades, Canada's oil sector may emerge from the shadow of the United States. But there is a downside: infrastructure limitations. Heavy crude requires specific refining conditions, and Canada's western coastline currently lacks large-scale ports and pipelines. However, Chinese investments and contracts worth tens of billions of dollars could radically transform this situation within the next 2 to 3 years. What lies ahead for American companies? Many had hoped that the energy revolution, shale oil, LNG, and new technologies would secure global dominance for the United States. But if the main buyer, China, turns away, the entire model collapses. The losses are staggering. In oil alone, hundreds of thousands of barrels per day. In LNG, halted growth, job cuts, and project cancellations. And to think, American LNG terminals were once built with Asia in mind. What is Washington doing? The answer is simple: nothing. The Trump administration continues to insist that China is exploiting America and that we will not back down. But in reality, it is American farmers, energy workers, and exporters who are suffering. Meanwhile, China is expanding purchases from Qatar, negotiating with Australia, receiving discounted oil from Russia, and building a strategic alliance with Canada. There you have it, the new geography of the global energy market. Can this trend be reversed? For now, it seems unlikely. The global situation is far too tense to speak of quick reconciliation. Experts predict that if things don't change, by the year 2026, the United States will lose its leadership in the LNG export market, ceding ground to Russia and Qatar. And oil? The loss of China triggers a chain reaction, from declining profits to a reduced share in the Asia-Pacific region. And even more importantly, America is losing political leverage. Energy has always been a tool of influence. Now China is saying, we can buy without you. Many analysts believe this will lead to a global energy restructuring in which centers of power shift toward Beijing and Ottawa, especially as Europe, due to its conflict with Russia, actively seeks alternative sources. There's growing talk that Canada is becoming the new energy hub of the West. Of course, no one is saying the United States will collapse. American energy is still strong, but the image of an invincible exporter has been seriously damaged, especially with political risks, domestic protests, and declining trust from global partners. All of this is the price of a trade war. So what's next? If you believe the pessimists, long years of isolation and lost markets. If you trust the optimists, a recovery of diplomacy and new agreements. But even in the best-case scenario, the damage has already been done, and rebuilding trust will be extremely difficult. Share your thoughts. Have we just witnessed the beginning of the end of U.S. energy hegemony? Or is this just a temporary imbalance that will be corrected in the future?